Hi everyone, welcome back to Be Rich. I'm happy to have you this evening as we discuss about an American company. Day before yesterday in the video, we had spoken about the implications of Trump's passing of most favored nation and that executive order and the implications on the pharma sector. And then into the video, I said we'll talk about an opportunity in an American pharmaceutical company, and I had hoped some of you would have guessed it. The company I want to talk about today is called Merck & Company. Its origins go way back. It started in a city called Darmstadt, Germany in 1668 by a person called Jacob Merck. And in 1891 is when they reached the American shores in New York. It was bought there by one of the family members whose name was George Merck. And in 1917, during the start of the World War I, the Americans had the Trading with the Enemies Act. They used that, and the American government seized Merck's assets in the United States. That's when the company broke with Germany and became a separate company, which is what we know today as Merck & Company. They're famous for many things. In 1940s, they were one of the first companies to do mass production of penicillin, and that was very useful for treating bacterial infections, especially during World War II. And in 1950s, they led the innovations in vaccine under Dr. Morris Hillman, who developed the vaccines for measles, mumps, and rubella, which a lot of us have had, the MMR, when we were children. And the hepatitis B vaccine also was developed by them. In the 1970s, they were famous for giving the breakthroughs in hypertension, blood pressure, and heart failure, those medications. And in 1987 is when they started their philanthropy arm and started doing donation programs in Africa especially, where they were donating medicines and saving lives. 2000s, when they first hit their first controversy, where they made headlines for this controversy for a medicine called Vivox, and that led to lawsuits, and they finally had to do settlements for these lawsuits, which ran into billions in the 2000s. And 2010 is when they became famous for their cancer drug and their oncology department, which came through breakthrough drugs for cancer. The last thing they made headlines was for in 2020s for the COVID. They were the ones who developed the antiviral drug to treat COVID-19. Of course, their vaccines did not have much success, but their antiviral medication did save lives during the COVID-19 pandemic. So, I've given you a brief history about the company to show you the size of this company and why this company should be in your radar. It's an old company, has a long history, has been doing this for decades and decades, and something definitely a vital part of our pharmacological stocks and companies in the US. So let's talk about the recent performance, because that is what we have to see, right? We looked at the history, it's there, it's good, but what is it in valuations now? So let's dive into what its current financial history is. So if we dive into that, that is the quarter one performance in US. The quarter one performance of 2005 is out. Their financial years are different than ours in India. We run from April to March, they run from Jan to December. So this is quarter one for them. The revenues are up to $15.53 billion. But if you see year on year, it's a 2% decline. Sales are up by 1%. And the earnings per share, if you see, it has beaten the estimates and sits at $2.22. 2025, we have to wait and watch because the tariffs are still looming. Though Trump has withdrawn most of the tariffs and he seems to have backtracked and backpedaled a lot of it, there is still a lot of tariffs hanging here and there with certain countries in Europe and the European Union, and there's still a lot of clarity which still is pending. And there's a base tariff of 10% sitting. So we really do not know where all this is going. So the tariff is still looming on their future for 2025. But how did they do segment-wise in terms of sales? The cancer drugs were up 4%. The vaccines were down 41%, thanks to the slowdown in China and Japan. They do mainly the HPV vaccine, which is predominantly used by women to protect against the HPV virus. And that is down in China and in Japan. Hypertension drugs, their sales were $280 million, which has been a boost for them. And their animal veterinary drugs is also up by 5%. In terms of business fundamentals, if you look at their financial health, they've been consistently profitable for the last 10 years. with stable earnings growth if you look at it. The free cash flow per share for the last 3 months at least is at $7.12, and the debt to equity ratio they have been bringing down in the last 5 years from 106% to 72%. This shows them being very conservative in their capital structure. What does that mean? Being conservative in your capital structure means you're cautious to death and sign of good discipline when it comes to borrowing money and being stable. Next is in interest coverage, earnings before interest and tax, and they have an interest covering of at least 30 times, which is very good. Earnings before tax, interest and tax is nothing but revenue minus operation expenses. So they seem to be doing very well there too. So what are the red flags? The red flags is they have a medicine which they rely on, which is known as Gardasil, and those sales are declined mainly because of reduction in demand. The tariff impact is also another red flag we'll have to wait and watch. And in 2028, some of the cancer drugs which they're famous for, which they've been making a lot of money off, those patents expire. So that is something of a red flag as an investor in the long term to keep an eye on. What was mentioned in the annual report, they're planning to do a $9 billion capex spending by 2028. That is to increase their manufacturing capacity, to strengthen their supply chain, and to lower the risk and support growth. Considering all the trade war and everything put together, this makes sense, and that is a good sign for an investor. They also have said in the annual report they're going to be focusing R&D to increase their pipeline of medicines which they're working on, and they're targeting increasing revenue to $50 billion by the mid-2030s. That is a great goal to have. Governance, they want to focus on independence of the board with strong oversight, which is also good news for the investors. So I've given you a broad outlay of where they are financially, what they've mentioned in the annual report, where their investments are. So I hope this is whetting your appetite. Because now I'm going to talk about valuations, where they stand now. Is it a time to consider? PE ratio is at 11, which is good. The PEG ratio is at 1.1, which is indicating this good value for growth in this stock. And the price to book is 4, which is in line with the industry norms in pharmaceutical companies in the US. Dividend yield is at 4.27% and the payout ratio of 47%. And they've been consecutively for the last 10 years increasing dividend payouts, which is also good news. So finally, what do we talk about valuations? Well, if you look at it, it looks like the current valuation appears reasonable. There's potentially a margin of safety there. So do you consider Merck as a company you would invest? There are other giants like Johnson & Johnson and other companies which are there in the pharmaceutical sector in the US. What is your opinion? Do you think Merck is a stock you would consider at this current price and valuations? With the scene currently now with Trump saying most favored nations, and the drugs which these people are making most of their money are in the Part B drugs, cancer, oncology drugs, and hypertension drugs. All of those fall into the 7% which I spoke about in the previous video. Though it is only $38 billion, they make a lot of money in that. And these companies are going to face pressure from the American government. And like I laid out in the previous video, if the American government and Trump are successful in wrestling better prices, then the insurance companies and the private sector will also be demanding better prices. Do you think Merck will go to court and try to stop Trump? Will they succeed? As an investor, where is your heart? Where is your soul? I'm curious to know. So down in the comments, please let me know what you think of Merck. Is it a company in your list? Do you have it in your PATAS list or American list? And I would love to hear if your arguments are for it or against it. As far as Indian stocks are concerned, I am talking about them in my Instagram handle. Come and join me in the group in different coffee ranges where we talk about Indian stocks and we talk about Indian investments I'm personally doing every day in different coffee ranges. Even American stocks, my advice would be to look at different coffee ranges in the current situation if you're looking and planning to invest in the US. Thanks for watching the video. I hope you had a wonderful day today and we're looking forward to getting back at it tomorrow. Tomorrow I'll come back with another American stock or maybe some macroeconomic news depending on what happens today during the day. Nothing else more to say. Thanks for being with me today on Be Rich. Good night.